Hi and welcome back to Revolut Stock Portfolio for another portfolio update. It's been another decent week. It's been a busy week for dividends. I just want to start off with a run through the Revolut Stock Performance Dashboard. You can see that I've been trading now since the 3rd of August. So I've been trading for 131 days now. And the key rule of investing is always maintain your principal, which basically means maintain your investment. So I like to use this dashboard just to give a high level view on how things are going. So we can see that the current fund value in US dollars is $3,906, and the fund value in pounds is £2,923. That's an effective exchange rate of 1.34 now. That's important when we look at the performance of the portfolio in dollar terms and in my home currency, which is obviously GBP. The reason that's important is because that translates against the initial investment. So we can see down here I've got a record of deposits. So in total, I have deposited $3,557 into the account, which was the GBP value of 2718. We can see there that the effective exchange rate is 1.31. So the pound has effectively strengthened to 1.34. And that's important because when we look at the value movement, the account is currently just under $350 in the green, which is really good. That's a rate of return of 9.8%. However, when we look at the value movement in pounds, we've made an increase of £205, and we can see there that that's only a 7.5% improvement. And the difference between those two rate of returns is essentially the strengthening of the pound against the dollar. So that's really important. I like to keep track. Ultimately, I'm looking to increase my wealth in pounds as I'm based in the UK, not in dollars. So it's really important for me to keep those numbers up to date so I know exactly where I stand. But to be honest, a 7.5% rate of return is nice. That includes dividends and it includes growth in stock value. It's been a really busy week, and it's going to be a really busy month. So just quickly run through the dividends. If we just go down, so far in December, I've received the following dividends. So Pfizer, just over $1, Intel, 83 cents, Southern Company, 51 cents, Johnson & Johnson, $1.04. Chevron, 1.13, IBM, $2.23, ExxonMobil, $0.84, and Microsoft, $13. So we can see in total, since I started trading in August, I've made over $30 in dividend revenue, and we can see that plotted on the graph. So far I've made $7.72 in December. September is my best performing month to date, and I expect December to be an improvement over September. I don't have a projection on how I think December will end, but to give you an example, ExxonMobil, actually IBM, so the most recent dividend was $2.23, and if we just have a look, actually, that's the first dividend I've received from IBM. Chevron's a good example. $1.13 received in December versus only 65 cents received in September. So I think there's some additional investment in the stock, and there you're seeing a real improvement on the dividend. So I'm expecting the December dividends to at least come in around $15 to $20, and that's just money that's coming in while you sleep, so to speak. And that's the beauty of dividend investing. You will see passive income coming into your account. So let's head over now to the Revolut app and just have a quick look at how we stand in terms of the stocks in the portfolio. Okay, so we're looking at the Revolut app. We can see the account value, as I said, $3,906. Revolut's reporting an increase of $285. So all in all, things are going pretty well. If you just have a run through the stocks, Apple's really come back, 7% up, stock price of 122. So I expect that stock. That's a stock that you want to have in your portfolio long term. AbbVie's flying now as well, 23% up. Really good dividend stock to consider. It's actually past my target price when I bought this stock, but I'm willing to hold on to it, and it's one of the biggest holdings I have in the portfolio. Really delighted to see Chevron back in the green, almost 7% up. That stock really got hammered in the worst of the pandemic issues. All oil stocks did, but we're really seeing the recovery now, and obviously the markets believe that the economy is going to come out of the worst of the pandemic due to the vaccine coming through now. So both Chevron and, as we'll see later, ExxonMobil are back in the blue, I think, back in the green. Domino's really just treading water. It was a really strong performer in the midst of the pandemic, the stay-at-home sort of market that was prospering, but it's kind of sort of treading water. But I do see it as a good growth dividend stock long term. Duke Energy's always performed strongly. It's another stalwart of the portfolio. Consolidated Edison, sort of breaking even on Consolidated Edison. Enterprise Product Partners, that's a stock that I wish I'd bought more of when I entered the stock. You can see it's over 20% up. It's one of the biggest movers in the right direction in the portfolio. Home Depot's just started to falter of late, but again, I think it's a sturdy stock to hold long term. IBM's recovered, as has Intel. Intel took an absolute hammering after the Q3 financial results, but it's come back to break even, which I'm pleased to see. Johnson & Johnson, another stalwart of the account. Kimberly-Clark was the most recent addition. I did a video very recently on Kimberly-Clark. Unfortunately, it's reduced 4% since I put it into the portfolio, but I'm happy to take the dividend in January and see how things progress early 2021. Both Coca-Cola and Pepsi are performing equally well, just under 7% up. Lowe's in the same vein as Home Depot, just sort of struggling, as has McDonald's of late. McDonald's was absolutely flying. Again, this is one of my biggest holdings. At its height, I think McDonald's was around $220 to $225 a share. It's back down to under 208. But again, I'm happy to hold long term. Mondelez confectionery company is doing quite well, as is 3M. Nice to see Merck & Co has improved back into the green. Microsoft, another stalwart, just staying around there. Happy to hold, would like to increase if I had capital. Realty Income's really in there for the monthly dividend, and it's kind of break even. PepsiCo, we've covered, is performing similarly well to Coca-Cola. Pfizer flying on the back of the vaccine, just under 20% up. PPG, I'm looking forward to receiving my first dividend next week. It's been a great addition to the portfolio. Again, just under 20% up. Prudential Financial, one of my remaining financial stocks, performing well. Really pleased. Restaurant Brands was one of my first picks when I was looking at ex-dividend stocks back in September, I think it was. It really stood out as a nice stock, undervalued. Obviously took a hammering due to the pandemic, but it's bounced back strongly. It's basically a restaurant portfolio which includes Burger King and some other well-known brands in the States. Really pleased to see that almost reaching double-digit growth. Raytheon Technologies, I always knew that it was a undervalued aerospace stock, which has now flown to 24% up. Southern Company's always performed quite well in a similar vein to Duke Energy. Simon Property, this is a retail property company, and look at that, almost 30% up. Really pleasing to see. AT&T was always undervalued. I always knew that sort of $27, $28 a share for AT&T was undervalued, so nice to see that, double digits. Beatrice, I still don't know too much about this other than it was a spin-off related to Pfizer. I haven't increased my holding there. I'm not sure what's going to happen with Beatrice long term. I did hear that they are looking to pay dividends, but at the moment this is the only non-dividend paying stock in this portfolio. Walgreen Boots, I just got an email the other day asking for some votes for a shareholders meeting in January, which I'm going to look into, because I think not only do you own part of a company, you also have a voice in that company, whether that's a remote answering a few questions. I think it's really important to exercise your right as a stockholder, so I'm going to look at that more closely next week. ExxonMobil, not quite in the green, but it's there or thereabouts, and I'm really pleased because that was a key laggard in the portfolio. I think at one point it was 25% down, which you never want to see. And Xerox is another, it's one of my favourite stocks. Bought it really cheaply. If you just have a quick look, look at the 6-month chart, you can see there I bought the stock really pretty cheap, just over $16, and then again added more, just 17.5. So really got into that stock cheap, and it's coming back and it's 40% up. Again, wish I had more on the stock, but the portfolio is what it is. I'm pleased. The cost base is around $3,500, and it's currently threatening to break through $4,000, so I couldn't ask for more. I'm expecting the dividends to increase. So I hope that's been interesting. That's where we stand as we come to year end. I'll hopefully do at least one more portfolio review before the year end, and as always, if you've got any comments, please comment down below and like and subscribe for more. Thanks.